You were one of the earliest entities to hold an investment conference attended by the president soon after he was elected into power in May. What does this mean for your relationship with South Africa? Are you still championing investments here? Are you still very much rooting for us?
Well, the answer is absolutely. In fact, I'm liberated from a corporate environment and therefore able to have a much stronger voice, be much more active, spend my time the way I think is optimal, and I plan to have greater impact, not lesser impact, on South Africa.
Let's talk about that impact. You're going to Yale, a prestigious university, Ivy League, as you say, and you're going to be teaching about Africa. I hope that won't be just limited to the campus, will it?
No, I will be active writing, as I said, publishing. I might appear on your global equivalents from time to time. Entities like Bloomberg have asked me to write for them and be on their shows, and I'm very happy to be a voice, as I say, around South Africa and Africa on the global stage.
The South African investment story. It's been 20 months since Cyril Ramaphosa came into office, finishing off President Jacob Zuma's term and then starting his own. Has he done enough?
Now, look, he's doing an enormous job for South Africa. It's like, the Springboks, they had to go through their journey in order to win the World Cup. We've got to back him to win his own World Cup. And as you say, myself and various other business people have been allies of him because we believe and have conviction that effectively what he's doing is turning around South Africa after 10 years of a coincidence of the rise of Jacob Zuma and the global financial crisis, which was a terrible combination for South Africa. And we are now 2 years effectively into his reign since he won in 2017 at the party conference. And I think he's delivering a lot. There's a lot more to do, and he can move faster and he can be more aggressive in many of our opinion with what he's doing to win the public confidence and to get structural reforms going.
When you say you want him to be aggressive, I feel like Cyril Ramaphosa has been in the presidency, in the hot seat for 20 months, but he used to chair ESCOM, for instance, the Interministerial Committee under Jacob Zuma. ESCOM is still a problem in 2019. And this is what I'm saying. I mean, investors in London, when he was there for the investors conference, they spoke about the lack of prosecutions. Surely we can't be the only ones that are running out of patience.
Look, we're cheering him on. Look, we're not only on the sidelines, all South Africans are with him. So we have to get behind him and be very active. But he needs to feel our encouragement and he needs to draw on the people around him to get the best skills around the problems. ESCOM is one example where he needs to deliver not only a vision for what the entity will look like, which Pravin Gordhan talked about, corporatization of transmission. We need the operating costs to get under control, and we need the debt resolved. And for that, he needs his allies in the public sector unions in particular to come to the party, not only just for ESCOM, but also for the public sector wage bill.
But this is the same allies, the same unions that wanted him to become president of the republic, which are now really, not willing to negotiate. I mean, the Minister of Finance called for patriotic negotiations. I think that fell on deaf union ears. You?
Well, I mean, it's really a question of asking them to take pain right now. And the truth is that we cannot sustain an economy with the level of expenditure and the low level of bang for our buck on that expenditure amongst police, education, health, nor can we allow ESCOM to be effectively a public sector employment agency without getting the productivity out of it. So, something has to go, something has to give here, and we have to take this under control.
Another thing that is plaguing South Africa, of course, is that unemployment has gotten worse when you look at the latest figures. And you see that it's particularly worrying among the youth. So during the first investment conference here, we heard some 290, 300 billion had been raised. And we want to know the equivalent of that in jobs. Is this government having a messaging problem or a job creation problem? Are they not telling us about the jobs they're creating? Are they not communicating effectively? Or are they just not able to create worthwhile jobs?
we have an economic growth problem. That's number one. You cannot create jobs in a below population growth rate of 0.5%. That's impossible. But when you dissect the statistics, we were losing jobs in manufacturing and in services in the last quarter, and we were gaining jobs in mining. So things are ebbing and flowing. Mining is coming back, and that's a very positive sign. Financial services losing jobs is more about technology leading the restructuring of the banking sector, and we've seen branches close, and you've seen the rise of digital banks, which are less job intensive. So they're going to be winners and losers here, and there's a revolution of, I don't mean a social revolution, but there's a revolution or revolving door of jobs and job creation and job losses that net we are not adding significant amounts of jobs, and we need to get the economic growth going.
And that's part of the problem. So now you have a lot of South African companies who are looking for growth because of our, below par performance in economic performance. You have a lot of South African companies looking for growth outside. They're even willing to go as far as to try new markets and get burned, but they know that their growth is not going to be here because economic activity has really been constrained. So isn't this a misnomer? And by this I mean the investment conference. Salam put up 1.1 billion in Morocco. I haven't heard of the new investments here.
No, look, I think, let's be clear, corporates in South Africa need to grow globally. They need to grow their base, which is South Africa. They need to grow in Africa, which is on their doorstep, and they need to grow and compete globally. Look at SAB Miller. That was a great case study, going from $5 to $12 billion and getting sold for $100 billion. It was a massive growth story that they evolved over several decades. So we need our global companies to be champions and to grow, like MTN, Standard Bank, and many others. There's nothing to constrain them. But effectively, the home soil is where these companies are driven, and there are pockets where they're growing. For example, the consumer retail area, the technology area. We've seen growth in those areas, and there are other areas that are declining. So we need to see the overall growth happen in the economy. 0.5% won't cut it. We need to be back at the 25-year average of 3%, at the least.
How do we get there when it sounds like the finance minister, the president, and the party are all on 3 different pages? Some have said that the criticism towards Cyril Ramaphosa is that he has not supported the aggressive reforms that his finance minister wants to see. Of course, there are political considerations there, considering that some of the stakeholders also brought the president into power. So how does he navigate this time, especially with the 3 months that we have under Moody's? Because essentially, you can't be investing in South Africa today when you're investing in an economy on the precipice. The value of your money would shrink.
Look, I think the finance minister is a battering ram for economic reform. And I would suspect that the president quite enjoys having him lead the way and lead the charge, and then he's filling in from the back with giving him support, which is what happened with the National Treasury growth document. Now, the growth document is not everyone's cup of tea, and there is an argument about how much austerity and how much stimulus you need. I believe you need austerity in areas where there's no bang for your buck in the public sector, and you need stimulus in areas to change the nature of spending from a consumptive expenditure to a productive expenditure, particularly amongst things like infrastructure and other forms of productive expenditures, which we're not seeing. So it perhaps means that we need stimulus and we need austerity, but in the right places at the right time.
Essentially, government is having the second investment forum saying private sector, come through, let's showcase South Africa and its economic opportunities, and let's try and make it easy for you to come and invest. But has government, Cyril Ramaphosa is a businessman, he's got the advantage. Has government learned to operate as a business? Because they're going to need to have a different kind of paradigm shift in order to work well with companies, especially in private public partnerships and projects like that. And some say the scope for infrastructure projects with the private sector.
Now you're back to my career choices, because the truth is that I feel like I have a particular role at the interface between the public and private sectors, given my role as an anti-apartheid activist in the past, my intensive work with government over the last 25 years, and at the same time my exposure to the private sector. And I do believe that this is a global phenomenon, that we effectively in the world have governments borrowed on the Roman model of thousands of years back in a modern and technologically driven world where democracy hasn't transformed itself and the model of government hasn't transformed itself. So South Africa is not alone in needing to transform the way it does business as a government and bringing on board business skills. But this government is certainly short of what South Africa is long of, which is private sector talent.
I close off my final question. South Africa is no doubt in a difficult position economically, but also right now with Moody's hanging over us, effectively giving us a warning for 3 months or maybe longer, has us really living on the edge. And I'm not sure how that rubs off with international investors, with asset managers who want to invest in A-graded bonds and stuff like that. Colin, will this be a successful investment forum, knowing all these, liabilities that could potentially hit the South African economy?
Look, I think this type of thing really helps. It focuses the mind, it organizes the campaigns. It also focuses the mind of the government on what regulatory reforms they need to undertake, like visas and spectrum and other issues around red tape or small business and so on and so forth, and getting foreigners into the country and attracting skills. But we have heard a warning, not just from Moody's, but from the finance minister himself in the medium-term budget statement, that unless South Africa gets its expenditure under control, it's going to lose control of the debt picture. So it's absolutely fundamental that we do that. We fix Eskom, we get the public sector wages under control, and we start to do the basics right. We get implementation of those. And then you will see us come off a low base. As I say, I think that South Africa is at the bottom at a 0.5% growth rate and get back to our medium-term 3%.
Speaking about medium-term policy statement, some say that the finance minister told us or painted a really, really scary picture for South Africans to come to terms with their economic realities and a deteriorating fiscal position. But finance minister forgot to tell us where the growth was going to come from. Am I the only one in that?
No, I think that he's been very clear, and he spent a lot of political capital on his document about what contains growth. So I think he has a clear picture of where the framework for growth is. But let's dissect it for a second. He's talking about public-private partnerships and crowding in private capital into ports, into rail, into power, things like this. He's got a lot of wood to chop to get the political allies to play ball with him, but we're right behind him because it's exactly the right thing. We need to liberate this country from the strangulation of ideological and other factors that prevent us from growing. And absolutely the private sector and business is one of the strengths that this country has. So use it to the full.
You'll forgive me, but you've been in infrastructure since way back in the days when you were at Standard Bank. What's government doing wrong when it comes to public-private partnership? Or rather, what does government, 3 things that government can do to improve today?
Well, the infrastructure fund is an example where it's mouthing that it wants a public-private partnership, but it's resisting a model of spinning out the project management company of the fund to have an independent entity governed by a public-private partnership board and an investment committee, but that fund manager being able to make the decisions on what to invest in and what not to invest in, what to originate, and who the people are they're going to manage, and then exit the projects to make the money. So you will not get private sector into equity and debt co-financing unless you have that kind of model. But the government, I suspect, doesn't necessarily understand this kind of devil in the detail.
I think what you're saying is that government's got a trust deficit still.
I think it's not so much trust, it's an understanding of how the markets works and what their requirements are, and we have to work on that together. We're in it together. Like the Bok team. You don't win if somebody drops the ball and somebody else scores a try. Everybody needs to score the tries and catch the ball.